The Soldivo Strategic Growth Fund is different in the sense that it is a truly actively managed, growth-oriented Philippine equity fund with a very clearly defined investment strategy. Strategy is simple, which is to use ATRAM's in-depth and comprehensive investment research capabilities to invest in stocks of high quality and rapidly growing Philippine companies, aimed at best capturing the growth potential of the Philippine economy. Peso cost averaging works if the long-term Philippine economic and stock market outlook is positive and if the fund strategy is positioned to capture this strong growth potential. That said, we have a positive view on the Philippine economy, which we estimate to be one of the fastest growing economies in the world, fueled by very clear growth drivers such as domestic consumption, accommodative monetary policy, and an expected surge in government infrastructure spending. Meanwhile, we anticipate inflation to stay within the central bank's forecasted range, and we forecast a healthy and gradual depreciation of the Philippine peso. Aside from this growth story in the economy, we think the Philippine stock market will do very well over the next 2 years, boosted by strong corporate earnings growth, inexpensive valuations, and low levels of foreign ownership, which will lead to a commensurate recovery of foreign investor buying. Investors should take a long-term view on stocks to maximize investment returns. Having a short-term investment horizon can leave investors vulnerable to buying high at high prices and to selling at lower prices. This is because, in certain instances, it takes time before the investment thesis plays out and because external factors can influence share price performance negatively in the short term. Over the long term, though, if the strategy is sound, investors should be able to maximize returns as all the noise gets priced out and all the positive fundamental factors like favorable economic growth and earnings growth prospects or valuation upside gets priced in. As such, given our strong belief in the strategy of the Soldivo Strategic Growth Fund, we advise investors to average down during periods of negative returns, to improve their cost, and to maximize potential returns.